Okay, we are live. We are late. We are two insurance agents, Chris Kamara with Cobalt Insurance Agency and Ryan Dunstan with East Main Street Insurance. We have been working pretty hard this past week. There's been a lot of new things going on in the market. There's been a lot of news outlets that have been putting out some information, and we're wanting to be those two agents that you can ask your questions to. You can confide in us and ask us just kind of what's going on, what's happening in the insurance market. That's why we formed Home Insurance Podcasts, or the Dukes of Hazard Insurance, as I always like to claim to fame. But we are here for you, and we've got actually a giveaway today, right, Chris?
We do, and it's in here. Just bear with me one moment. I'm
Okay.
going as
We're so
fast as
busy.
I
Chris has
can
been
here.
doing this great schedule for us for what we're going to be chatting about today and what we brought to you. But Chris found some leftover fire extinguishers in your storage locker, and we
Yeah.
decided that, right? Where were they at?
Oh, they're here. Yep.
They're here. Okay. Chris has got them
Yeah.
on file.
So we'll go over that in just a second. I've got it up on screen right now, and these are our topics we're going to go over. I'm going to keep looking at this screen just for one more moment here.
Okay.
And then we'll go over this. But if you want to read over these topics for the audience, I'm just making sure we've gone live. So.
Okay. Yeah. So topics today are going to be the big thing in the news is all these insurance carriers, mainly 5 that are going to be re-entering the market, filing for rate increases, wanting to come back into the state of California. So that way, maybe we can start to have a little bit of competition and maybe starting the market to shift. We've definitely been in a battle for the past 5 years, I would say, if not maybe a little bit longer. So governor had an executive order last week. I know Ricardo Lara had gone over some recent developments in regards to his sustainable insurance strategy and wanting to put those into place. SB 254. So that's
I'll go over that. Don't worry about that part.
Yeah, that's on the topic. And then the California Fair Plan has filed for rate increase. That is brand new, effective 9/30. We will go over that as well. And then also,
fresh breaking news, Ryan found that out yesterday, right? You
looked
at it yesterday?
Yeah, I don't know why, just a little bug in my ear. I was going to actually be chatting with the California Fair Plan liaison. So I was like, oh, let's just see what's going on and with Fair Plan, why they're meeting with me. Wasn't related to that, but that's what I found out on my own.
Cool. Outstanding.
And then the wildfire discounts, this is what they had brought up, is that this is going to be now going to a granular list. I think we've brought this up before, but this is going live next month. So we wanted to let you know what that is, how to fill it out, how to talk to your broker, and be eligible for some discounts.
Cool. All right. We'll run through this now. I apologize too. We were a little late, but this is some definite breaking news that has been happening. So the first one we're going to go through, oh no, where it is. It's out of order. So we're going to go through this. This I've been asked about by a few people now. California leaders say homeowners insurance companies are coming back to the state, specifically Mercury, CSAA, USAA, Pacific Specialty, and California Casualty. And this is an article from KCRA that I just took a couple of screenshots on. And Newsom is saying that we had 4 of the admitted carriers come back. And I want to point out very clearly in here, Mercury clarified and USAA clarified in separate statements that they never stopped writing coverage in the state. So they've been here, they've been writing. You could read the article on KCRA, but it goes over that. The key point of this is it's in the news, it's being talked about. I get a lot of questions about it. I'm sure other agents are getting questions about it. And what we see in the news politically and what actually happens, there's a disconnect. And I want to be really clear, just because we hear something in the news does not mean that these carriers not even these specific carriers are going to be specifically writing in higher or near high wildfire areas.
Right.
And again, just from the carriers themselves saying something different, like USA, was it CSAA? And where was that here? USAA and Mercury said they've never stopped writing in the state. So
Right.
just want to put that clarity point out there. I've got to jump around a couple.
And real quick, that they've been competitive too whenever they are writing. So
absolutely. And then I got to jump around a couple spots. So we'll go over this executive order because this is tied to that same subject. So there was an executive order from the California governor's office, and he's getting others involved to hopefully stabilize the insurance market. So it's a directive to develop long-term solutions, and it's pulling in, Department of Insurance, Wildfire Fund Administrator, and a couple of others. So there's that.
Yeah, I think it's going to be putting pressure on them, like you're saying,
pressure on the departments or agencies. I don't know about pressure on the insurance carriers unless you've seen otherwise.
I think it's going to put pressure on them to come back because it's going to, the framework that the Department of Insurance has put into place, having insureds make those steps to be more eligible. It's not like next year going to happen. I think it's further down the road for sure.
Sure. Yep. And then that ties into SB 254. So not a press release, not an executive order, but there's an actual, a Senate bill that was passed. SB stands for Senate bill, if I remember correctly.
Okay.
But it goes over, ways that they're helping to make this happen, right? So collaboration, how they're doing. This one here is broader insurance stability efforts. So they're trying with a whole government approach to stabilize our insurance market. And this goes over that executive order specifically. So SB 254 and that are well tied together. I will go back to this article from KCRA, and it said something about a year. Oh, here we go. So to your point, Ryan, you'd mentioned, it says here in the article, all 5 insurers have requested rate increases of 6.9%. And that's true. Where is it? Said a year. Sorry, this is very quickly thrown together as it's new news. I don't see where it said that a year. I may not have put it in here because it didn't print correctly or in order, but all of this that's happening, it had mentioned that we won't see much of an effect from this unless the carriers are already here, that we won't see anything for about a year.
And yeah, I think I want to say, that's probably goes in line with you file for the rate increase. It still has to go through its due diligence with the Department of Insurance, which could take several quarters. And then it has to be implemented, rolled out to, their own internal rating platforms. So things are never an overnight experience. They could still get pushback from the Department of Insurance. And now they're past that timeline date and they've got to redo their filings for a future date, kind of like how Fair Plan took that 2-year date, because there was so much back and forth. I think the Department of Insurance is now trying to make it more streamlined. So when you file for rate increases, things come out in that 6-month, 9-month time frame. So things are supposed to be expedited a lot quicker, especially whenever it's underneath that 6.9% rate increase. So I think that's kind of why they're filing for 6.8, 6.9, just so that way they don't have to do more like back and forth when it, like basically explaining why you want a 20% instead of a 6.9% that's standard,
Yep, I agree.
Yeah, so I would say 6 to 9 months is probably going to be that time frame. So what is that? Summer next year.
Yeah. That sounds about right. It does. Assuming we don't have any more major fires or anything like that.
But see, that's the thing, is that these carriers that they've already been writing, if there is another wildfire, they can just go out and file again. They're able to use forward-looking modeling, so, or even just historical modeling or current modeling. So if something does happen, I'm trying to now think on top of my head when State Farm announced, oh, we're pulling out, like that wasn't an overnight thing. So if there is a fire that happens, they're probably going to give us a 6-month leeway of like, we're going to stop writing on November 1st or something like that,
Mm-hmm. Cool. And then I'll let you go over the wildfire discounts granular list. I did not put stuff together for that. I don't see any comments so far.
Oh yeah.
Got a couple of viewers.
What is that? What's the comments? Because I know you put a blast on it.
I don't see any. I'm waiting to see some comments here.
Okay.
But I see that we have viewers.
Well, let's take a second to pause. Like, what is it? It's if someone comments,
I can go down to the bottom of this. So that was the join the conversation and win a fire extinguisher. So for any people commenting on today's podcast, they will pick 2 people and get them a fire extinguisher.
Yeah, you just want to leave that up so all these people are in seeing. And fire extinguishers are huge. I mean, there's not someone that's going around to each individual house and checking to make sure you've got your up-to-date fire extinguisher. And this is essentially your first line of defense from kitchen fires, electrical fires. And I think that's kind of why you made that great investment in them, and you are offering it to your clients, because if you can stop a quick kitchen fire, a grease fire or something, that saves you maybe $50,000, $100,000.
Oh, absolutely.
So great.
You lose a frying pan, or you lose a couple of, utensils and things, versus losing half your kitchen or all of your kitchen and then having to go through that hassle, right?
Well, and throw one in your car. I mean, I got one in my car, but there was something in Auburn the other day where there was a car that caught on fire, and this guy pulled up and he put it out with his extinguisher. I mean,
that's awesome.
It's just something where you're prepared for something on, at any time. And you could even be out on the side of the road driving and you see a fire out in the middle of the road somewhere, or like, these chains near the freeway that catch something. So.
Oh, absolutely. You can see those sparks.
So it's all, I think it was a great investment, man. Great job. What was I going over? Granular? Sorry, I totally got off track on that.
I will back up and we'll go over the wildfire discounts granular list.
Yeah. So, I mean, we're all familiar with what the regular codes are. I was going to try and share my screen real quick, so that way I
go for it.
Can show what the discounts look like. Nope, not that one. I got a lot of discounts going on. Where is it? Oh, is it not? It's just a PDF. I got to actually open it up to my window.
Go ahead.
Okay. All right. So here's my window that I found. So starting in November, there will be a granular list that is going to allow consumers to apply for discounts, because right now it was all or nothing. You either had the top tier or you had the bottom tier, and you had all of those bullet points. So now you can go back in and you can apply for. I'm gonna go to the bottom tier because that was kind of a huge thing. You can go in and now say that you've got the other items, the Class A fire rated roof, the fire resistant vents, but maybe you don't have your enclosed eaves. Maybe you haven't taken that step on mitigating and hardening your home. So now you can qualify for the other granular things that you do have in place with your home. So these are all anywhere between, I would say, 1.5% to 2%. each item whenever at the end of the day, so they can quickly add up to that other, because it was 15% right now.
Mm-hmm.
So
On the wildfire premium, yes.
yeah, so these can quickly add up to that exact same figure, but now it's just giving you more options so that way you can apply for discounts. I guess I should have asked Fairplan whenever they were here the other day, but how are they going to now incorporate this into their system? That's going to be interesting.
Yeah, absolutely. I mean, when we're quoting, and I saw it yesterday, when we're quoting and you answer the question, are they part of a Firewise community? You say no. You go to the next screen, it pulls from a database now, and it applied that discount even though I said no. Because I personally didn't have that data of whether or not that specific home was in a Firewise community.
Yeah. Yeah, I heard from another agent that they were continually pulling that list because they have to report to NFPA or to the Firewise database, and then Fairplan just pulls it up and sees whether or not it's inside of their.
Which is a great addition. It's a great development for them. So I wonder how this feels into there, right?
Yeah. Granular work is going to be nice. It's going to be, more discounts. Not everyone's going to apply or be still eligible for these new carriers, but there's continual steps that are being put into motion.
And I think we talked about it before that these every single one of these are going to have an inspection to see if they meet that criteria, right?
Yeah. So you're going to go ahead and apply for the discounts, send it into your agent, and then an inspector comes out from Fairplan to verify that this is in place. And I've got several renewals that are coming up where they didn't meet XYZ criteria of the tier that offer discounts. So now it's being taken off. So now your rate is going to increase accordingly. So yeah, definitely. And that's, I think, one thing that Fairplan is wanting is that they do want, basically you to be true and correct whenever you're filling this out. By signing below, you're verifying that information actually exists, because it will be a part of the inspection process. So I know we're all struggling with the Fairplan rates and the actual premiums skyrocketing, but we need to do at least our due diligence in making sure that whenever we're applying for these discounts, that they are true and correct.
Cool. What else you got?
That's coming out soon. We put back up your.
We'll just turn. Yeah.
Nice.
And then, so tell me about your successes you've been having. We were talking about that earlier with your new carrier. You've written significant amount of policies with them, and it still looks pretty competitive and what you're thinking it should be, or how's your experience been?
Yeah, I would say experience-wise, the carrier is very good at rating accordingly. And there has been a few instances where people are outside of town, outside of the 1,000 feet zone or 1,000 feet mark of the hydrant, or even the 5 miles of the fire station, and they have a higher rate and or similar to Fairplan with the other policy. So I guess it's really just making sure that you're in a lower protection class, which not a lot of people can control. But I've had more success stories where people are saving $1,000, maybe even more, versus a few here and there where it's the same price. So it's always at least a good idea to check in with the carrier that is being provided and just seeing what their rate increase. It doesn't usually take long. It's just the agent, getting back.
And I just got that carrier myself and started quoting with it. And in the quotes I've done, I haven't found anything yet, but from the quotes I have done, it is the $1,000 to $2,000 savings. It's not on the Fairplan. There's some cool stuff it does with the water shutoff. And the carrier did make it clear to me when I was onboarded that they don't want to write anything over PC9 or protection class 9. So definitely a point there. It's not for that cabin out in the woods with nothing near it. And like you're saying, the fire station 10 miles away and no hydrants. But yeah, they
and the
definitely
other
have a
thing
place there.
that, they are lacking on a few things, whether, the loss of use, that's always near and dear to my heart. I'm a
I
proponent of
remember
that
in past
coverage.
podcasts, you went over that. Yep.
So they are not as proficient as other carriers. So it's just having that conversation, that dialogue with the client, so that way they're well aware of kind of what they're signing up for,
Mhm.
instead of just like hey, here it is. Like, I know it's cheaper, but what's the catch?
Sure, absolutely.
And then the other thing too, it's some people that I've gotten off of some other carriers, they've got that multi-policy discount. So now you've got to have that conversation and aware of it. That way you're not catching your client off guard, because you may be offering them savings, but they've been so blindsided by Fair Plan and the other policy that they're not aware that, now that package role kind of comes into play where they have their auto somewhere else, maybe packaged with that wrap policy. And now their autos are going to increase if they pull that away. So I think that's probably what's really great about me and you, is we have those full conversations of what the big picture.
Yeah, we want to look at the overall insurance cost for the client, not just the home or the home and the auto. So I agree with that completely.
Yeah.
I'm going to
Do we
minimize
have
this just
anyone
for 1 second.
leave a question?
I do not see a question.
Oh man, this is a great fire extinguisher.
So I'm going to share a couple of things since we got some time. Just give me 1 second. I have to bring it out here.
Yeah.
I was putting together our newsletters for September, and I was pretty happy with the content. So let me load that back up here.
Yeah. That was a really good. You do that monthly now, right?
I do. Yeah. And we're moving to a new vendor next month, so I'm very excited for it. But this is our newsletter out to our clients, and this is the one that goes over the fire extinguisher, but also it goes over that carrier that Ryan got and I just got myself. And we did go over it quickly in a prior podcast, but these are the highlights. It's got to be owner occupied, primary, secondary, no rentals. It's got to be built right. It's got to have a good roof, updated systems, well maintained. They want clean properties. And then they don't want any diving boards or slides for their pools. And
4 feet.
The
4
fence.
feet fence. Yep.
Mm-hmm. Correct. So I put it in my newsletter as a real quick recap. What I'm going to do is I'm going to close this newsletter and I'm going to open the one I send out to my referral partners, because that has some pretty good information in it as well. And we can just quickly go over that. This is the part that I think is relevant to everybody that I probably could send out to clients as well. But wildfire and CAL FIRE maps and how they relate to carriers and their appetites and ratings, there's no correlation. So what carriers use is they use their either specific model, or they use one of or a combination of these three. So ISO, which determines protection class from 0 to 10. Verisk goes from 0 to 30. And then they're now, they were Fair Plan, and Fair Plan is now using Zesty AI as their scoring system, right?
Yep.
That happened last year, if I remember correctly.
Yep. You got it.
And then CoreLogic Wildfire Risk Score, so 1 to 100. So unless you know which one of these scoring systems used, you may think that you're in a low fire place, but you might be in a high fire place, right? If you're on a CoreLogic score and you're a 30, that's lower. But if you're a 30 here, that's the highest Verisk. Or if you're a 2 and you think you're great, or a 5, you think you're great, but it's a PC5, that's in the middle of the range, right?
Right.
For me, the carriers I write, the way I look at it is anything over a PC2, sometimes even counting PC2s, puts us into high fire, or most of my carriers won't want to write in that area.
Yeah.
Most of my admitted carriers, I should say. But yeah, that I think is a very, very misunderstood piece, right? Of how to determine the risk or how the risk is being rated. It's all dependent upon what model is being used. Because I get clients that call me all the time and say, hey, CAL FIRE says it's not in a fire zone. And I have to educate them on this. So this was a pretty good one to put together and send out.
I mean, it's good to kind of that clients are being proactive though too, because you can go to your fire station and a lot of times there's reclassifications of protection class that happen, and depending on what carrier you're using, they may ask for that letter from the fire department to ask to find out what your true valid protection class is. So,
So I'll close out of that. And that exhausts everything I put together. So I don't see any comments. I'm going to jump over to social media real quick and see if we got anything there. I didn't share it as much. Oh, you shared it? No, you're live here on your page. I shared it to 1 or 2 places. Nothing there. No viewers on that side. Let's see here. We've got 1 viewer on Facebook.
If you're viewing
us
and you've
they
got
haven't
questions
commented at all,
and nobody commented, and you want a free fire extinguisher, yeah, please let us know. And even if so, if you were watching this podcast and we are going live every week, please comment on our page and we'll get to it.
Yeah, if you leave a question, we'll get to it the next week.
Yep, definitely.
Cool. I just did the check. I don't see anything here.
Okay.
Maybe we'll call it now and then we'll pick it back up again next week.
Yeah, that'd be great.